It's another half hour of markets analysis and insights on Business Incorporated live from Channels TV. And here's what's coming up. Egypt and China sign peace exploration pacts. Botswana extends fresh produce import restrictions. The price of corn doubles in Nigeria. Hello and welcome to the program. I'm Will Ibang. First things first, let's check in on the markets. We begin with Africa, where major equities were trading negative at intraday. Nigeria down 0.44%, is in the red this afternoon. 71,000 still, but we'll watch and see how it closes. Now, South Africa's also in the red, 0.27%, 27% down. Now let's see how Egypt did at intraday. Hope they did better. Let's check in on them. Egypt, no, they didn't. 0.77%, losing that 25,000 points there. And Kenya closed Wednesday's session in the red. Now let's check in on the Middle East. I hope they did better than what we did in this side of the world. Now we see that Middle East was also mostly in the red. Abu Dhabi down 0.38%. Dubai more than 0.5%. Elsewhere, let's check in on Saudi and the Qatari indexes, shall we? We see Qatari and the Saudi indexes. Wow, Saudi in the green, the only gainer in that region, 0.08%, and Qatar more than 0.5% down. Now in the UK, Prime Minister Rishi Sunak held an emergency press conference on the asylum treaty with Rwanda. But we're going to get more details of that with Juliana. Juliana joins us from London. Juliana, we know that the British Interior Minister, James Cleverly, signed a new asylum treaty with Rwanda on Tuesday. But what more did Prime Minister Rishi Sunak have to say about that?
Good afternoon, Will. Well, it's safe to say that Prime Minister Rishi Sunak is a man on the ropes, really trying to save his administration, which has been teared into two. And it started, obviously, several months ago, but I think it kick-started yesterday, where we all got that shock revelation about Robert Jenrick, who was the immigration minister, really at the heart of this very controversial Rwanda deportation bill. Now, Robert Jenrick blindsided the Prime Minister and actually announced his resignation while, as you call him, the Interior Minister, the Home Secretary, James Cleverly, was in the Palace of Westminster reading out this emergency legislation, which is going to go to the vote in the House of Commons next week. Now, that was a massive egg in the face for the Prime Minister, because, of course, we know that Robert Jenrick was one of his staunch allies. And I think anybody who watches news frequently in the UK, you would have seen him at, the tannoy, basically delivering some of the issues that this Rwanda deportation scheme has. So, yes, there was issues last night. I think if any Prime Minister or President has to call for an emergency press conference, then, of course, you know that there are issues at home. And there are several issues because, of course, we know that the Supreme Court just last month deemed this Rwanda deportation scheme as unlawful. There were several reasons why, but one of those issues is because they do not deem the East African nation, with all its history, to be a safe country, which is why we saw James Cleverly fly 4,000 miles to the East Central African nation to try and drum up more support. They believe that they've come back with an oven-ready deal, which addresses some of the issues of the Supreme Court. Now, on one side of the House, there are many MPs who find it absolutely disgusting, and they're not happy that Britain would be prepared to break international law, which is go against the Human Rights Act, to push these deportation flights through. On the other hand, you have some Conservative MPs, including the Immigration Minister, Jenrick, who resigned yesterday, and Suella Braverman, which is now a thorn in Rishi Sunak's side, saying it doesn't go far enough. And part of the agreement, Will, believe it or not, is that Britain will take some asylum seekers from Rwanda into the UK. So it's a bit of a mess. And unfortunately, you know, the Prime Minister was bombarded with questions at the press conference about his tenure, about his leadership, about a vote of confidence. And it certainly does feel as if there could be an early general election. If not an early general election, then certainly a bid for leadership, which, of course, over the past 13 years, we've seen several times in this party.
There's always something to remove one prime minister, the other, not lasting long enough to see through their policies. Juliana, this is quite sad, especially with the immigration laws that the EU and UK are trying to bring up to stop illegal immigration. We do hope that they come out with a more robust plan and something that is favorable for, you know, the countries that are trying to come in, the immigrants and the West. So let's just move on to other things that probably will give some good news, Juliana. We're seeing that Aldi in the UK has raised the minimum wage for workers in its shops and warehouses to £12 per hour. And this comes amid low unemployment. You do know it's quite difficult to get jobs these days, but definitely a boost for Aldi staff, wouldn't you say?
Absolutely a boost, Will. And, you know, Aldi is a discount retailer, so it's not one of the top four. I don't need to name the top four. I'm sure we all know the big shops in the UK. But certainly in recent years, European disruptors like Aldi and Lidl have really started taking up a large part of the market share, which has been dominated for many years by the likes of Tesco and Sainsbury's. And now this is not the first time that Aldi are doing it, especially as we get close to Christmas. They have said that they are going to be lifting a minimum wage for their checkout workers and for logistic operators. So you mentioned that, I believe, £12. Now that's if you live outside of the M25. So of course, if you live outside of London, things are much cheaper. So you don't need much of a larger wage. But if you live within the M25, basically in the capital, then you're going to be getting £13.55 an hour. I don't know what the latest rate is of the Naira, but I think that's about 15,000 Naira per hour. And this is basically so people can cope with the cost of living crisis. We haven't been speaking about it much over the past couple of weeks, but I can tell you that it's still got a firm grip. I know you were in London a few weeks ago, Will, so you know how expensive things are here. But no, you know, this is great. It's a great boost, particularly for those who work in shops. Sometimes it can be difficult. I know there was some data out a couple of days ago saying shoplifting is well on the rise because, of course, people can't afford food. They're stealing from shops. If you're a frontline staffer at a shop, you know, you can be abused on a daily basis. So, yeah, great boost for those workers. And of course, it does go to show that you may not be the biggest shop in the UK, but you're doing your best to make sure that your staff are compensated for the hard work that they put in.
That's definitely the most important thing. I do know that shout out to Aldi for all they're doing and the discounts they're giving to people. Very important. And also, what are the markets saying to you, Juliana, this afternoon?
They're saying red. Red is the colour of the markets in London at intraday, Will. The FTSE All-Share is down 0.27%. The FTSE 100 down to at 0.25%. And the FTSE 250, the domestic market, Will, that's down by 0.76% at intraday. In the currencies market, the British pound is currently trading up against the US dollar by 0.14%, also trading up against the euro by 0.09%. And the British pound is down against the Japanese yen by triple-digit figures there, 1.51%, Will.
I do hope the Rwanda saga doesn't drive down sentiments tomorrow, Juliana. Bring us some good news. Thank you so much, Juliana, for that update. Now we go to the EU now, where EU and China are holding their first face-to-face summit since the pandemic. The Chinese president will meet the presidents of the European Council and the European Commission. Joining us with more on EU-China relations is Deutsche Welle's correspondent Chiponda Chimbalo in Berlin. Chip, what's on the agenda?
The European Commission President Ursula von der Leyen has called the talks with Chinese President Xi Jinping good and candid. And the Chinese leader has said that mutually beneficial cooperation is needed with the EU. But it will be hard for the two sides to find much to agree on. Geopolitical issues will be on top of the agenda for EU leaders, in particular Russia's war in Ukraine. Brussels wants to use its influence to get Beijing on its side to help it end the war in Ukraine. And it will be emphasizing the need to respect sanctions against Russia. While Western countries have several sanctions on Russian exports, other countries, China included, are still trading with Russia. Now that limits the effects of the sanctions, and it allows the Kremlin to raise money for its war chest. But the EU won't only be focusing on Russia's war in Ukraine. They will also want to discuss the ongoing Israel-Hamas war in the Middle East. And of course, EU leaders are looking at the trade deficit with China as well, and climate change and human rights.
But what kind of outcome can we expect, Chipanda?
Well, one area where we can expect some agreement on is climate change. Experts from Brussels and Beijing frequently conduct dialogues, and they cooperate on many topics in that area. But the situation is a bit more complicated when it comes to getting China on board with Russia. Both China and Russia are part of the BRICS group of nations, and its members, of course, have been reluctant to condemn the Kremlin or take any actions against it for the war in Ukraine. And trade will remain contentious. Geopolitical tensions have only highlighted how important it is for the EU to diversify its supply chains and reduce its dependence on China, which it of course considers a partner, competitor, and systemic rival. Now, this is why we've seen EU countries also looking at how they can better protect their critical infrastructure from Chinese investors. Both Brussels and Beijing have their interests, and of course it's becoming harder for them to be partners because of their fundamental differences on issues like the war in Ukraine and human rights.
We do hope they sort out these trade issues, but what can we expect from the markets?
Well, European markets are expected to trade lower today. Traders are now turning their focus to U.S. weekly jobless claims data slated for release later today. And that, of course, will provide investors with a better sense of the direction U.S. interest rates may go next year. And the outlook for the world's second biggest economy, China, continues to be on the minds of traders. Rating agency Moody's has slapped a downgrade warning on China's credit rating. And here in Europe, meanwhile, Germany's latest industrial output fell for a fifth month in a row. It declined 0.4% from September in October. Now that puts, of course, Europe's largest economy on track for a recession.
Not so good news there, Chip, but thank you for that update, Chipanda Chimbalu from Berlin. Now we go to the U.S., where stock futures hovered near the flat line early on Thursday, following a three-day run of losses for the S&P 500 and the Dow Jones Industrial Average. Futures tied to the 30 stock Dow slipped 0.19%, S&P 500 futures slipped 0.39%, and the Nasdaq futures was down 0.58%. Now the moves follow another losing session for the major averages and another signal that the late 2023 rally may be fizzling out. And the Dow and the S&P 500 closed lower for the third straight day, losing 0.2% and 0.4% each. Now, the Nasdaq Composite also dropped about 0.6%. Now, the three major indexes remain poised to finish the fourth quarter and calendar year higher. Now, investors have key data releases to mull over. Private payrolls data issued on Wednesday showed that employers added 103,000 positions in November, coming in below expectations. Commodities market next. We'll take a break. When we'll come back, Business Incorporated still here. Thanks for staying with us. Now let's talk corn today, otherwise known as maize. Recently, the global price of corn slumped to a record low of $177 per ton. But in Nigeria, we have seen a reverse movement with a price at a high of 580,000 per ton. 580,000 naira per ton, now from 290,000 naira per ton at the beginning of the year. It's a huge leap. We're going to bring in Victoria Momo, analyst with Financial Derivatives Company, to break it down for us. Good afternoon, Victoria. Good to have you, but not good news. Why has the corn price in Nigeria doubled compared to global prices, even using the parallel market rates?
Thank you very much for your question. So I would say that the exchange rate has a role to play in that increase or spike in the price of corn, the exchange rate depreciation. The parallel market rate has been declining, has been depreciating for a while, and we've seen a significant depreciation of about 32%, in the last 1 year, and that is due to the fact that we're having the issues of forex, supply shortage, and is affecting various commodities that are being imported into the country. But apart from the increase in the domestic price of corn, which is of course triggered by the exchange rate depreciation. We also have some domestic challenges that are driving that spike in the price of the commodity, and one of which is actually the fact that we are having these logistic challenges, the spike in logistic costs, because where these commodities or the corn is actually being produced is mostly in the northern side, and of course the northern states, the distance between the northern states and where it is being needed, the difference between the cost of transportation between the northern regions and where the places are being, like for example Lagos State, there is a spike in the cost of transportation, and that is due to the fact that energy prices have increased. There is also the aspect of infrastructural challenges, which has led to the supply shortfall of corn in the country, and that is also driving the prices of the commodity. Most of this corn production is actually done by small-scale farmers, and there is actually significant post-harvest losses that are actually about 30% of post-harvest losses that are being gotten in a year due to the fact that there is poor storage facilities for this corn. So because of this supply shortfall, we've seen this filter into the domestic prices of the commodity. So one, the global prices is actually declining, but we're not seeing that reflect in the domestic prices, and that is because of the domestic challenges that we're currently facing in Nigeria. And the worst part of it is that the poultry farmers are actually worse hit, because 45% of maize that is produced in Nigeria are actually used in the production of animal feed, and that is actually weighing on their cost of production. And we've seen many poultry farmers actually shutting down because of their inability to sustain production. And don't forget that there is also the aspect of declining demand for eggs and chickens and the likes of it, because consumers are basically squeezed currently.
I hear all you've said, Victoria. Quite not very good news for most people, most Nigerians, especially people who eat corn or use corn as a base for most of their meals. But we're getting that report from the Economic Intelligence Unit, that's the EIU, saying that they're saying that there'll be a gradual decrease in the average maize export prices throughout 2023 and 2024. They see easing in prices here. But with all you've said, would there be any impact at all in the domestic prices of corn in Nigeria? Would that be reflected if prices keep declining? Would we see that reflected in our domestic prices? What with our rate of inflation?
So basically, the EIU predicts that prices would ease through this year and into next year, and that is due to the fact that there will be ample supply from the major corn-producing countries like the US and Brazil, amid subdued demand for the commodity in the global market. But is this decline in price actually going to reflect here in Nigeria? To some extent, yes, and that is due to the fact that recently we've actually seen that the CBN has removed the import ban, the import restriction. There is there are 43 items of commodities that are actually being restricted from accessing forex, and maize is one of them. So now that this restriction has actually been removed, we'll most likely see that the importers of these commodities would be able to have access to importing these commodities from the global market. So when there is an increase in commodity, the importation of corn into the country, we would see that reflect in the domestic prices of the commodity. And why do I say that? Because importing this commodity into Nigeria is relatively cheaper compared to the getting it from the domestic market. And if you compare the domestic price of the commodity in dollar terms, using approximately 1,200 naira per dollar, you would see that the price of corn is currently being sold at 438 naira, $438 per ton, as opposed to the global market price of $177 per ton. So this difference between the prices would actually encourage the importers to go towards the global market to get this commodity, and then it would reduce the competitiveness of the global commodity price with the international price, and then this would affect the domestic producers of corn and also weigh on their profitability. Recently we also heard that there are issues of cash scarcity that is coming up, and this is basically going to hurt the demand for corn and other commodities, because the producers, like I said earlier, or the farmers that actually produce corn are actually small scale farmers, and what they do basically are cash transactions, and most of them are unbanked. So as a result of that particular cash transaction, and all, we could see a subdued demand for this commodity, and this would affect the profitability of the demand of the domestic farmers.
Just very quickly, Victoria, just give us a very brief outlook here, especially with last month we saw NNPC Limited saying they're planning to produce cleaner fuel such as ethanol from corn and sugarcane. Where we are, they even signed an MOU with the Niger State government, but where we at in terms of production, how realistic is this? If we aim to produce fuel, do we have enough production, corn production, to be able to meet these goal or objective?
So basically here in Nigeria, we still have a huge supply gap of corn production in Nigeria, and that is due to the fact that we do not have sufficient corn to meet with our local demand. So as a result of that, we have a supply deficit of about 1 million metric ton, and we meet that supply deficit by actually importing this corn into the country. So there is that challenge of domestic production of corn. So now that we use that corn is actually one of the products that is used to make ethanol, we can see that realizing that particular goal of increasing production of ethanol would actually most likely be unrealistic to some extent, except the issue of corn production is actually being addressed in the country, and that is by ensuring that there is proper infrastructural facilities to keep to preserve this corn, and in order to improve the yields of corn, and then the aspect of ensuring that farmers are incentivized and also financed in order to increase the production of corn in the country. So once this is actually addressed, we'll see that there will be an improvement in corn production in Nigeria, and that would filter into the use of corn for other of corn derivatives like ethanol, and even animal feeds and other confectionaries.
Victoria Momo, I do know you have a lot to say about that. Thank you so much for sharing your thoughts on Business Incorporated. Victoria Momo, analyst with Financial Derivatives Company. Thank you.
Thank you for having me.
Now we'll go on to other stories now, where we see China and Egypt have signed a cooperation agreement to advance efforts in deep space exploration, spacecraft development, and construction of space infrastructure. Now the cooperation agreement between the Egyptian Space Agency and the China National Space Administration is specifically focused on the International Lunar Research Station. The two agencies will encourage joint research and development cooperation in a variety of areas, including lunar and deep space exploration, the development and launch of spacecraft, construction of space infrastructure, satellite data reception and application. Other areas include the BRICS remote sensing satellite constellation, space science and astronomical observation. Now on Monday, Egypt sent the remote sensing satellite Mizrat-2 into orbit via the Chinese Long March 2C carrier rockets from the Jiuquan Satellite Launch Center in northwestern China. And that's a wrap on Business Incorporated. Join us tomorrow for another edition. I am Will Ibang. I'll see you tomorrow.